Today we're going to talk about tax tips and tax strategies. Hi everyone, Stephen Hamilton here with Tax Time. I want to thank the Kwak brothers for inviting me out to talk taxes with you guys. Before we get started, I want you to hit the subscribe button, like the video, and make sure that you share it for all of your friends, because the last thing we want is bad tax advice going around. So make sure you replace that information with something that's quality. I get a lot of questions about what people can do to help improve their tax situation. So today we're just going to hit about 10-15 points of just simple little tax strategies that you can utilize to help improve your tax situation. Item number one, for those of you who are working with some company that are not self-employed, you want to make sure you're taking advantage of any pre-tax deductions that you can. So if you have childcare that you pay for, make sure you're utilizing your pre-tax childcare benefits. Make sure you're taking advantage of your 401k. Make sure you're taking advantage of simple IRAs, any of those different deductions that you can on a pre-tax basis. That's number one before you get started in any other investment. Make sure you're taking advantage of those ways that will help immediately save you money. Number two, if you are working for somebody else and your spouse is not, make sure you look at the balance of benefits that you can offer between both situations. And we want to look at entity strategy based upon what benefits we can offer. So let's say we have a health insurance situation that has a very high deductible. Well, for your spouse's business, we may want to look at an entity that allows you to write off some of your medical expenses on a pre-tax basis. So tax planning is not about incurring expenses. It's about taking the expenses that you already incur and finding a way to make part of that deductible. So if you do qualify for a home office, so we'll start on tip number 3 here. If you do qualify for a home office as a self-employed individual, there's no reason not to take advantage of it. It's not a huge audit flag like everybody thinks. The problem is most people don't fill out the form correctly. So you want to make sure you have good quality advice from an accountant. Item number 4 that I want to talk about today. For those of you who are working for somebody else, or you have your own corporation that you're utilizing, make sure you take advantage of reimbursement plans. If your employer is willing to reimburse different expenses, make sure you take advantage of that. Make sure that you are actually submitting your expense reports, because the IRS will not allow you a deduction if your employer would actually reimburse those costs. So that's a very big point and something that I see in audit quite a bit. Are situations where someone said, well, I don't feel like submitting these expense reports, so I'll just claim it on my tax return. It doesn't work that way with the IRS. It has to be something that the IRS or that your employer would not have reimbursed, or that they did not reimburse that was ordinary and necessary for your job. So let's move on to number 5. Number 5 is a simple and easy one. Take advantage of contributions to an IRA. Yes, there are thresholds where you may not be able to deduct your contribution to a traditional IRA. But in those situations, we look at doing what's called a backdoor Roth IRA, where you can put your contributions into a traditional and then roll those over into a Roth. So make sure that you're taking advantage of IRA contributions in general. If your children are working, have them put money into an IRA. They could very easily fund a Roth IRA, and if they need the money out of it later for school, they can always pull their principal out tax-free. All right, number 6. Number 6 is one of my personal favorites. It is the Mega Backdoor Roth. The Mega Backdoor is utilizing your company's 401k plan and putting in after-tax contributions. You can then later roll those after-tax contributions into a Roth IRA or into your company's Roth 401k. That can allow you to move up to a total of $56,000 into your 401k plan or into after-tax contributions with a Roth. Number 7 is home ownership. So depending on what state you're in and if you're currently itemizing or not, your home ownership can be a huge benefit for you. I've already talked about home offices a little bit, but what we can utilize is your mortgage interest, your real estate taxes, or even potentially house hacking. If you rent out a part of your home, or if you rent out your home for a couple of company meetings, you could very easily write off some of those contributions or those payments for that time in the home. So as a business owner, if I host a company party at my house, I can get receipts and documentation and quotes for how much it would cost to have that party somewhere else. But then I could choose to host it in my home, pay myself for that expense, and deduct 100% of that. And then personally, I would not have to include that in my income. So make sure you're taking advantage of the different loopholes that you have through home ownership. The next one that I'm going to talk about is business ownership. Business ownership is exceedingly important. It doesn't matter if you're driving for Uber, if you're driving for Lyft, if you have a multi-million-dollar company. Business ownership gives you the flexibility to increase your tax planning. Now, I'm not talking about creating a fake business there, because you have to have a profit motive. You have to intend to actually turn a profit. Plus, we want to have that extra little bit of income. Business ownership will allow you to restructure things for reimbursement policies, such as your cell phone, such as business use of your own home. It'll allow you to create your own 401k plan. Certain types of entities will even allow you to pay for medical expenses that you might not have otherwise been able to write off. Number 9, rental property. Rental property can be one of the best tax deductions and tax savings methods through appreciation and increasing your net worth. When you have a rental property, your goal is to increase your net worth. Your goal is also to hopefully have a little bit of cash flow. But tax deduction wise, we can actually create some benefits that may cause you to not pay tax on that income currently, and even potentially leave that property to your family later on. So rental property is hands down one of my favorite strategies to utilize. My next favorite strategy to look at is college expenses. If you're self-employed, you can look at setting up a potential reimbursement policy that will allow you to write off up to about $5,200 of education expenses. So you want to look for a couple of different strategies, depending on your employer reimbursing them, if your own business will reimburse them. But then the big ones are different education credits that are available to people. There's the American Opportunity Credit for undergrad. There's the Lifetime Learning Credit for graduate school. Now, I'm going to give you guys a bonus tip for number 11 here. Finding an accountant. Finding somebody qualified is probably the best and biggest tax tip that I will give you. It's not just about finding the guy down the street and talking to him. It's about finding somebody that you can sit down with and spend some time planning. An ounce of prevention is worth a pound of cure. We've heard that one a million times. The goal is to take the time before something happens to plan out what we're going to do and how we're going to achieve tax savings. If you already sell a property and the cash is in your hand, I can't help you because you're already going to pay tax on that. But if you call, talk to somebody, and find someone to help you plan who understands your situation, they're worth their weight in gold. So you want to make sure that you reach out, interview, ask questions about their education in tax, ask questions about strategies, ask about their different comfort level. You know, a little bit of time to get to know someone and find somebody who meshes well with you can really save you thousands of dollars. Most accountants work with clients worldwide. We have portals, we have technology. I have clients that I've never met in person, but I do Skype meetings with. So it doesn't matter where you're geographically located. You can still find someone who is up to date, is qualified, and can help you. Thank you guys for joining me for Tax Time. I want to make sure that you hit that like button, make sure you subscribe, and then don't forget to share this video of tax tips. Do me a favor and share it on Facebook, share it on Twitter, share it everywhere you can, so we can get some good quality information out to everybody. And I want to thank the Kwak brothers for inviting me over. If there's any questions or if there's any topics that you'd like to see me cover, just leave a comment below.